Hello everyone. As expected, last night Fed kept the interest rate unchanged as it is fourth pause this year. It is what widely expected, so no surprise there. But the surprise was Fed chairman's press conference. Please look at this S&P 500 price movement. That itself explains completely what happened yesterday. Here, for most of the day, it was traded near flatline. But as soon as the press conference started, it started to increase and closed at the near highest point of the day. So as usual, let's do a deep dive about what he said in the press conference. If anyone fancies seeing the whole video, please have a go. I will attach the link in the description below. However, I'll provide the summary of that. Here, in order to easily understand, I will answer from our existing 3 questions point of view, such as: is this the peak interest rate hike? Do recession averted successfully? When Fed will start the rate cut cycle and how much next year? Just a bit of the warning. For none of the above questions, he answered an absolute answer like yes or no. Rather, he answered all in the open-fashioned manner, but he did with 80% for one side and 20% on the other with very interesting future projection graph. So, first question. Is this the peak interest rate hike? He said for now they think yes, but they don't want to take the options away from the table. Here I took the snapshot from his press conference. If required, please pause and have a look. Each dot represents each FOMC member in last night FOMC meeting, and the graph represents what each FOMC member thinks the interest rate by the end of that future year will be. For example, in 2023 it's done, no more rate hike, and same peak for 2024, 2025 and 2026 as well. So none of the member thinks that they will increase further. There is a variation in the scatter plot that different FOMC member thinks different number of rate cut in the upcoming year, which we will discuss in a moment. But here to answer the question, is this the peak interest rate hike? Indirectly, this plot answers that as yes. Now let's move to the second question. Do recession averted completely in 2024? For that, he said he can't answer that 100% sure there will be no recession kind of. And he said this in 2022 December FOMC meeting. Majority of the members predicted that they might see some recession in 2023. Fortunately, it didn't happen. But at that time, they had some kind of fear. Now this time in 2023, none of them for today forecasting the recession in 2024. And also he showed a couple of graphs. Let's see those. First, US GDP projection. Just look at those red underscore or red line in each year. That is the median projection. Then around green bar or line, those are the expected range. So far, we got 3 quarters official US GDP growth data. By estimating the 4th quarter, they project 2.6% increase in 2023 calendar year. And for 2024, because of this tight monetary policy, they think that will drop to 1.4%, but not into negative territory, which is then its recession. Regarding unemployment, we know last week for November month it came as 3.7%. From there, for the whole year 2023, they think it will increase just to 3.8%, and even on 2024 it will increase only to 4.1%. So in both cases, they expect strong labor market and stronger economy. Then coming to our final question, when Fed will start the rate cut cycle? To answer that question, again, let's go back to our first graph. Each FOMC member's projection of interest rate in the future upcoming year. Here, for end of 2024, majority of the FOMC members projected the interest rate will be around 4.6%, which means it will be at least 325 basis points interest rate cut. In addition, PCE inflation for November month is due in 2 to 3 weeks, but before today's FOMC meeting, they calculated the estimated value. And Fed chairman said that in the press conference, for November month, he estimated the overall PCE inflation as 2.6% and the core PC inflation as 3.1%. So he acknowledged inflation is dropping, labor market is softening, and supply side concern is also reduced. All this indirectly suggesting the rate cut as well. So the overall press conference conclusion, no possible interest rate increase, at least 3 cut in 2024, and no sign of recession. Because of this dovish press conference, US market becomes super bullish, increased crazy. Dow Jones moved above 37,000 all-time high value. And even Fed monitoring tool showing that near 80% chance Fed will perform the first interest rate cut as early as March, which was around just 50% yesterday. In the end, Dow Jones increased 1.4%, S&P 500 up by 1.37% and Nasdaq up by 1.38%. In case of VIX, it marginally increased but still around 12. And this US market positivity transferred completely into GIFT Nifty. Today early morning at 3 a.m. Indian Standard Time, it closed at 21,260. We know the premium is 90 to 110 points. Considering those, for now it's indicating mega gap up opening of 200 to 250 points. Then coming about oil, last night for the week ended December 8, US EIA Energy Information Administration said that the US oil companies withdrawn 4.3 million barrels of crude from their stockpiles. This much bigger than expected weekly withdrawal means more demand or supply issue, which in turn made the oil price to increase near 2%. At the time of this video, Brent crude closed at around $74.5 US per barrel and WTI crude trading just below $70 US per barrel. Moving on, the press conference was between 2:30 p.m. and 3:30 p.m. Eastern Time, and at 4 p.m. US market closed, so there was no time for all Indian area to react. Only HDFC Bank reacted and it increased near 2%. I mean, don't know why in the last 3 sessions in ADR, HDFC Bank was positive, but on the following day in the Indian market, it closed on a negative note. In that way, the arbitrage difference widens now to 3 to 4%. Anyway, as it is, only Infosys closed negative, all others looks positive. So those were the things happened last night in the global market. Now let's look at the India specific information. First, about Reliance. Yesterday, global rating agency Moody's affirms the Reliance rating as Baa2 with stable outlook. They also said they expect their EBITDA to grow by around 14% to 1.7 lakh crore rupees in the current financial year. Here, this news, I think it's positive, but don't know why Reliance GDR in Europe closed negative of 0.74%. Let's see how Indian market reacts to it. Second, about institution. For the fourth consecutive session, FII was net buyers. Yesterday, the net bought for 4,710 crore rupees and DII net sold for 960 crore rupees. As a summary, US Fed chairman spoke very dovish with his very positive projection graph, which in turn made the US market, GIFT Nifty and banks Indian ADR all super positive, which now indicating the gap up of 200 to 250 points. Let's see. However, Reliance GDR negative close is a bit of concern. Moving on, for last few days, I haven't mentioned about stock short build-up and long build-up to reduce the length of the video. But in the last 3 videos, I got some comments to include that, so adding it again. Yesterday, as per stock open interest, Infosys, TCS, Indus Tower, PI Industries, Apollo Tyres, Ultratech Cement, AU Small Finance Bank and Gujarat Gas got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Container Corporation, TVS Motors, Pidilite Industries, Ramco Cements, REC, Hindustan Petroleum and Vedanta got an increase in open interest with a positive price close, indicating long build-up. About the things to look out, around 12 p.m. India's wholesale inflation is due. Other than that, in the aftermarket hours, around 6:45 p.m., Europe's interest rate decision, and for US market in the night, weekly jobs data and November month retail sales data are some of the items we need to keep an eye out today. Coming to technical, yesterday, Nifty opened slight positive, but immediately it lost the momentum and started to slide heavily, and in the afternoon hit the day's low of 20,770. However, after that, because of this heavy FII buying, Nifty showed a smart recovery as it recovered all its losses and closed 20 points on the positive side. On the closing basis, it defended both 19,850 and 19,900 and it closed near flat with a positive bias. Thus, on the daily chart, it formed a doji candlestick pattern, We know we discussed multiple times doji is a neutral pattern and indicates the indecisiveness among buyers and sellers about future market trend. However, here the closing level is similar or near to the opening levels, which was the day's high zone. Hence, this is increasing the possibility of rebound towards 21,000 to 21,100 level in coming sessions as long as it holds 20,850 on a closing basis. And also now on a 6 days in a row, despite consolidation and correction, still it indicates the chance of an up move. Let's see. In case of Bank Nifty, it also had the consolidation throughout the session and finally ended flat at 47,092. Thus, on the daily chart, it formed a bearish candlestick pattern with a long lower shadow, indicating strong buying support at lower levels, which even helped the Bank Nifty to close above the 47,000 mark. Hence, to sustain and further advance the upward momentum, Bank Nifty needs to maintain levels above 47,200. A decisive close above 47,500, where call writers are active, could pave the way for additional gains, targeting levels of 48,000/48,500 in the upcoming session. Moving on, regarding the options front, the maximum call option open interest was at 21,000 strike, followed by 21,100 strike, with meaningful new call option writing at 20,900 strike and then 21,000. Thus, the options data indicating 21,000 to 21,100 will be the near-term resistance. Whereas the maximum put option open interest was at 20,500 strike, followed by 20,800 and 20,900 strikes, with new put option writing at 20,800 strike and then 20,500. Hence, the immediate support at 20,800 to 20,900 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.